Hello traders, good day to you all. This is Christopher Glen. Today is the 30th of September 2014. This is a daily market review for the current market status. We've received a bit of weakness both on behalf of the Japanese yen and the Nikkei this morning, and that's a very important indication for us. When the market is in a pinpoint where it's expected to change its direction or to begin a new impulse movement, then we can see an inconsistent expression on behalf of the currency and on behalf of the market regarding the Asian market. Because usually, when the Nikkei is dropping down, then the Japanese yen is gaining strength and vice versa. But in this case, this night we've received weaker Japanese yen and weaker Nikkei, meaning that generally the market is not in an potential to invest at the moment, waiting for additional information to come into the market, and that's logical. If we look back to Monday's announcement, you can see that we've got low amount of information, and generally today we had a very low amount of information as well. We had another information regarding New Zealand, but nothing important over there. And the Chinese market had the final manufacturing PMI indication. Again, not really important for the market, but we can see that the European market, on one end, has several announcements. The pound received bad announcements just lately, but did not express any kind of movement because we've received the equivalent strength on behalf of the GDP report. And on the other hand, we've got several announcements regarding the euro, Canadian dollar GDP report, and consumers' confidence on behalf of the US dollar market. So we could say that at the moment the expression of fear in the market is delivered because of the important announcements that we're expecting to see today and later on this week. As we can see on Wednesday, on Thursday, and on Friday, and non-farm payroll, a lot of good announcements during the week, and then traders do express a bit of fear when they expect to hear a lot of important announcements, and by that they cause the market to express an inconsistent expression on behalf of the connection between the market itself and assets and currencies. So we can see that problematic scenario reflecting through the Japanese yen. As I said yesterday, my expectation is that the Japanese yen will lose strength in the market while all the other assets will gain strength. But we'll have to wait and see during today. I'm expecting the euro to gain a bit strength, the Canadian dollar to gain strength, and the dollar to lose strength. And let's go to the chart. Let's see what I'm talking about. So first of all, we can see that indeed the Australian dollar versus Japanese yen, and the Australian dollar is among the strong currencies today, but generally it's a weak currency, just as the New Zealand. We can see that we've received a long impulse movement during August and the beginning of September, and since the 10th of September we received a pullback of an A wave, a B wave, and a C wave, dropping down toward this rate over here, which is the target line. In this case, my expectation is that indeed the Japanese yen will lose strength in front of the Australian dollar. Again, not the strongest currency, but still a good potential to see an uptrend over here. And I see the same potential on a variety of other assets. At the moment, the Australian dollar gained a bit of strength. As I said last night, we've received a bit of weakness on behalf of the Japanese yen. You can see this uptrend over here on an hourly chart. That's expressing the weakness on behalf of the Japanese yen. But we will have to see other markets gaining strength. Now, I know that the aspect in the market is that the euro should lose strength, but once the Japanese yen is expected to lose strength and the dollar is expected to lose strength, then even Draghi with his speech on Thursday won't really have tools to weaken the euro in front of weaker currencies. At the moment, my expectation is to see weaker Japanese yen, weaker dollar, and the euro to gain strength in the market. That is my expectation according to charts, plain simple, with no analysis regarding economy and so on and so on, because usually, again, you'll see that a lot. You look at the calendar and you can see announcements on the calendar that will deliver several good indications regarding currency, and then you'll see the opposite reflection on the economy and the currency itself. So that's exactly what happens. This is why I'm analyzing, usually I'm analyzing charts, I'm analyzing structure, and not more than that. So we can see generally that all the assets in front of the Japanese yen is in the potential to gain strength. But as I said, the dollar itself is in a potential to lose strength, and we can see that very nicely on behalf of this structure. We can see that we've received an impulse 1, 2, 3, 4, 5, and an A wave, a B wave, and a C wave, meaning a potential to see the dollar crashing down in front of the Japanese yen. And what happens usually is that when the dollar is losing strength in front of the Japanese yen, it's pulling all the other assets higher. So I do expect the Japanese yen to lose strength in front of the major currencies, while it'll gain strength in front of the dollar. Regarding the gold, I'm still in that perspective that the gold will gain strength in the market, long-term investment. At the moment, it's just fluctuating sideways because the market is expecting to see some sort of expression on behalf of the dollar and the Australian dollar. We know that there's a strong connection between the gold, Australian dollar, and US dollar. If we'll go to the chart of the dollar index, we can see that the market on 15-minute chart and an hourly chart is still fluctuating around the same levels, but we can see the same structure as we saw on behalf of the dollar versus Japanese yen. We can see the 1, 2, 3, 4, and 5, and we can see the A wave, the B wave, and the C wave, meaning that still on the dollar index the potential is to see the dollar crashing down. At the moment, we've got two scenarios for this aspect. The first one is that we will receive a downtrend movement equivalent to the A wave, meaning until approximately 85.4. On the other hand, if we receive a larger movement, approximately till here, 85.2, then that will be the beginning of a new impulse movement, and that means that this is not an A, B, and C pattern, but an A, a 1, a 2, and a 3 of 4 and 5 sequel that will drop down and continue dropping down. So right now we're at the important point where the market can move forward to a lower rate as an impulse movement or as a C wave, completing a structure of the A, B, and C pattern. So we will need to wait and see. But anyway, I do expect the market to cross this trend line lower, and by that expressing weakness on behalf of the dollar. And again, connecting it to the announcement, I can't think of better solution than seeing the euro gaining strength, the Canadian gaining strength, and the dollar losing strength as the expression of the consumer confidence is expected to reveal a weaker expression over here that will change the appearance of the economy itself. Now, there's a lot of discussions regarding the base of the economy in the United States at the moment. Obviously, the economy itself is climbing higher. There's good vibes, there's good confidence on behalf of consumers, on behalf of producers, and it feels like that the monetary policy in the United States regarding the monetary policy on behalf of Draghi during the 2013 period, buying bonds, pushing more funds into the market, caused the market eventually to climb up. But we do understand that this uptrend, this stronger market, is not an expression of better economy, but an expression of not something natural, but something that was made manually. And in this case, every weakness, every small weakness that will ignite the market will cause a stronger wave of pulling funds from the market and will cause the market to drop down. In this case, a bad indication on behalf of the dollar over here regarding consumer confidence will definitely indicate that the market is not expressing the same potential as the announcements themselves. Consumer confidence is how confident consumers are, how confident in purchasing new products, how confident they are in spending the earnings. And in this case, if the consumer confidence will go lower than the expectation, then that will be very, very bad for the economy. That will cause the dollar to lose strength, and that will cause a lot of traders, a lot of investors to pull funds out of the market. So I do expect to see an indication over here. I'm sure that the market is expecting to receive the indication patiently, but anxious to see the announcement, and this is why we've got a stock market. We've got the gold fluctuating sideways, and we've got Japanese yen not gaining strength, not losing strength at the moment too much. And long-term investments, long-term movements are expected to begin today or later on this week. So I'm really waiting with anticipation to see what will be the results regarding consumer confidence. I'd like to wish you all the best with your trades. Have a pleasant day, and bye bye.